Here we have a video of Charles Hoskinson, the founder of ADA or Cardano, talking about his stance on the crypto market and the fact that it truly is the end of our current 4-year cycle, which may or may not be true. But if we're entering a bear, technically we did see a 4-year cycle. It's just we didn't see all the other things that we typically see in a cycle. For example, we didn't see some major blow off top in Bitcoin. We didn't see a rotation into other altcoins, which many people were expecting and would usually state that is the end of the cycle. So I think a lot of people were expecting certain things, but that's the reality of markets. It's you never get what you expect. And history doesn't tend to repeat, but it does rhyme. And so if there's one thing we understand about markets is that you can expect the unexpected, and that's exactly what we got. But either way, here's Charles Hoskinson stating it best, and I do believe he makes a pretty good point.
Everybody entered, myself included, 2025 thinking that the Trump administration was going to be this magic net positive for the ecosystem, because he's literally, the U.S. government has become a bag holder. You know, it's like that's the biggest economy in the world, and it's gone from trying to kill crypto to embracing crypto. But sometimes by having the big guy hug you, they hug too hard and they love too much, and it kind of crushes your ribs, kind of like Lum from Goonies. So what we're having to contend with is the U.S. government, in a very hand-fisted way, has been, in some cases, a little unhelpful to the industry. So it created an irrational exuberance, and it interfered with our normal 4-year cycle that we have. And we're trying to sort all that stuff out.
And so whether or not what he said is true, the fact that we got hugged a little too hard by the US government, I do believe one thing is true. And that is the fact that the market had a lot of exuberance moving into 2025 after the November election, which did create for a scenario where markets rallied extremely hard into January and February, where XRP put in a new all-time high a bit later in the year. Another major point I want to contend or share is the fact that we likely did see the 4-year cycle, and if this is the start to a bear, which now I'm beginning to believe it is, then it doesn't mean that money-making opportunities are off the table. You can still make money in crypto, and there are loads of ways to do it, whether it's finding cryptos that are relatively more strong than the rest of the market or are good for buying dips, which will perform extremely well into the next bull market phase. Whether it's dollar cost averaging through the bear market and buying new local lows across the board in some major cryptos that you want to hold into the future that truly will modernize and revolutionize the global financial system. Or whether it's simply short selling, taking on a bit of leverage and shorting into a few rips as the market recovers off of new lows. Whatever the case may be, there's always ways to make money in markets where there is a market to be had. And so throughout this video, I'm going to try to remain as neutral as possible and just show you what I am seeing on the charts, then help you to make your own decision about what to do. Because at the end of the day, I can't tell you, hey, go be a bear, hey, go be a bull. You're going to go and do that anyways. I just want to open your mind up to a lot of new information on how to think about whether or not we are in a bull market or a bear market for many of these cryptos, because most things are going to follow Bitcoin. So first I want to set the stage by covering some news for each one of these cryptos. Some of them don't have much going on, maybe like a Doge, but others have experienced some really positive news. We've covered a lot of the positive news for XRP on this channel over and over and over again. So go ahead and refer to those videos. But in this case right now, Bitcoin was acquired to the tune of another 8,000 by MicroStrategy, or better yet, rebranded Strategy, for an average cost of about 102,000 per Bitcoin. They're currently now sitting on 650,000 Bitcoin, and I do expect them to get to the point where they'll reach 1 million Bitcoin at some point in time. But notice that even his buying all of this great institutional demand is not enough to keep the price of Bitcoin up, as it recently dumped to $89,000. Then you have a Solana now getting another ETF through one of the world's largest asset managers, Fidelity, which is launching on the NYSE as FSOL, or Fidelity Solana, which should create for an environment for far more growth in support for the asset. You have Ethereum doubling down on what they were designed to be in a new letter from the team and Vitalik Buterin, the co-founder of Ethereum and arguably one of the most well-known in the entire Ethereum ecosystem, talking about how Ethereum was not even created to make finance efficient, although that's what the blockchain does. And in many ways, Ethereum wasn't efficient when it was congested, which is why they've been working on so many different things in order to make the blockchain more efficient. Either way, it has by and large the most value locked and stable coins on chain. So Ethereum is not going away. They also have institutional demand and adoption through their ETF, which came way before anything else except for Bitcoin. But they even state and double down on the fact that it was created so people could coordinate without trust in intermediaries. The manifesto is a positive statement for these values: credible neutrality, self-custody, verifiability, and resistance to convenient centralization, which, by the way, centralization is convenient, and many people would argue that it's necessary for any company to succeed. When you really think about the major companies of the world, the Nvidias, the Apples, the Amazons, the Facebook Metas, all of these companies have one person they answer to, which you would argue is centralization, which is why sometimes it feels like crypto falls behind, because they have all of these foundations and they have voting structures and governance, and things get lost in translation and then nothing ever really gets done. But if the key leadership can figure out a way to create a system where we no longer need centralization but can still get things done, Ethereum is going to be in a really good place. And I actually really like to see this. So go ahead and check it out at Ethereum Foundation on X or Twitter. As for Dogecoin, Dogecoin is just Dogecoin. I didn't see that much positive or negative news around it. I think it's just going to pump and dump alongside the memes and arguably just with the crypto market because it is such a large crypto by market cap. That said, the Coin Bureau recently posted that 42% of the XRP supply is now in the red, and that is the lowest it's been going all the way back to November of 2024 before it rallied hard for these current highs. And now we are seeing a new pattern and a new trend in XRP and the crypto market. But I had to go and double verify this exact same data for Bitcoin. And you can see that even on Bitcoin, we are at the lowest profitability we've seen essentially this entire bull market, where we've been at new highs going back to September 10th of 2023. So it's been more than 2 years since we've been in this range, which means a lot of people are in losses. And when you experience that type of pressure squeezing the emotions of the market, we can expect even more volatility. I personally believe the market's probably going to rally a little bit back up to 100 to potentially even 106,000 on the high end for Bitcoin before putting in some new lows, because we are officially in a new downtrend. In the meantime, we are still seeing a lot of Bitcoin leave exchanges on exchange reserves. You'll notice that we started flatlining right around here in October, end of October through this month in November. We saw another little bit removed from exchanges on that dip down to about $89,000, currently sitting at $93,000 on Bitcoin. And so although we saw Bitcoin removed en masse from exchanges through this period of time into that all-time high of $126,000, it looks like we're starting to flatline now, and we're starting to see more uncertainty. And it's very much possible that we start to do what we did back here from June 28th all the way into September 1st, where you saw Bitcoin being sent to exchanges. Now, the only reason you'd send Bitcoin to exchanges is if you want to sell. So when it's removed from exchanges in custodial wallets, whether that's for retail or institutions, that simply means that they're buying it and holding it for the long run. They are looking at the future. They're looking at Bitcoin and crypto as an investment. And so over time, you want to see this thing continue to trend down. And that's actually what we've seen here with bouts of flatlining, bouts of upward momentum in terms of deposits, but generally speaking, the trend has been down and will continue to go down over the course of this next coming year to 2 years, even if we see more sell pressure and new lower lows. This is a good sign that investing in crypto, and better yet, Bitcoin, is one of the smartest things you can do. As a hedge against inflation, as a hedge against fiat currencies, as a form of digital gold, which is far more efficient, effective, and even transparent. We know exactly how much Bitcoin there will ever be. We don't know how much gold is in the ground or even sitting in the drawers and dressers of people in India, which has so much of it in jewelry alone.